Did you know that there are only 3 investment account categories? If you're a new investor just getting started or an experienced investor looking for a quick refresher, then this video is for you. Hi, welcome back to my channel 3 Minute Money. I'm Pat Zumbush, your YouTube CFP. Thanks for listening and supporting my channel. If you're new here, be sure to subscribe to my channel to stay up to date on all my videos. In today's video, I'm going to share with you the 3 types of investment account categories you need to be familiar with so that you can set yourself up for financial success. Let me start with the fact that there are at least 20 to 30 names of accounts you can use, which is mind-blowing, even though there are so many different accounts. The good thing is that we can bucket them into just 3 categories. 1, taxable accounts, 2, tax-deferred accounts, 3, tax-exempt accounts. Now that we know the 3 investment account categories, let's go into a little bit of detail for each of them, and I'll also give you some examples of each. Let's begin with taxable accounts. These are any account that the IRS gets to tax income in the current year. Whoever is designated as the account owner of the account is the one responsible to pay taxes for that year. Taxable accounts must report income earned in that calendar year, and for the average person, the income is in the form of interest payments, dividends, or security sales in an account. A taxable account is the only one where you have capital gains, whether short-term or long-term. Common examples of taxable accounts include individual or joint checking and savings accounts, CDs, investment brokerage accounts, and trust accounts. If you're not sure if you have an account that is a taxable account, a telltale sign is that you receive a 1099 INT or 1099B for that account each year. Next are tax-deferred accounts. Most commonly, these are retirement accounts. With these accounts, you do not pay taxes on the contributions you put into the account or on the earnings made in the account until you take the money out later in retirement, hence the name tax-deferred. There are numerous tax-deferred accounts out there, but the most well-known ones are traditional IRAs and simple IRAs and employer plans like 401ks and 403bs. It is on these accounts that you get a notice when money goes into or out of the account. The money you take out triggers something called a 1099-R. Lastly, are tax-exempt accounts. The earnings made in these accounts, whether in the form of dividends, interest, or capital gains, are totally exempt from taxes. Ollie, oxen free. Because these accounts are exempt from taxes, the IRS is a bit particular about who can own them and how much money can go into those accounts. Some common examples of these accounts are Roth IRAs, Roth 401ks, health savings accounts, HSAs, and 529 plans. So there you have it. Although there are tens of thousands of different types of investment options out there, they all will fit into one of these categories: a taxable account, a tax-deferred account, and a tax-exempt account. If you know what bucket your account falls into, you will know how and when you will be taxed on the earnings in that bucket. Be sure to give this video a thumbs up if you found it helpful, and be sure to check out my other videos here. Until next time, I'm Pat Zumbush, your YouTube CFP. As always, thank you for letting me help you do wise things with your money.